Japan has been in the limelight over the course of the weekend, with the snap election being called by the new Prime Minister Ishiba, ultimately seeing his party suffer the worst result in 15 years. Question marks about whether his leadership's going to last already, and it's going to continue to remain busy, because on Thursday, the 31st of October, we see the latest BoJ interest rate decision, which provides the basis for further volatility for the yen going forward. So let's take a look at what's happening in terms of market expectations for this meeting. As you can see here, 86% expectation that we see rates remain as they are. Now, bear in mind, of course, Ishiba was coming into power on a ticket of backing, or certainly markets perceived him to be backing, the idea of further rate hikes and further normalization and a move away from Abenomics, which is all about sort of loose monetary policy. There's now question marks about whether he'd have to either leave or potentially try to have more influence from those supporting the Abenomics side of things. So that's part of the reason why we're seeing Japanese yen weakness. But the question mark here is from the BoJ, how do they see things going forward? Markets are expecting December to be a potential live meeting in terms of a rate cut, 53% chance of a 10 basis points hike. Well, 10 or 20 as you add up the 47 and 6.4. And then beyond that, you can see the expectation is that we gradually see rates moving towards the upside over the course of 2025. So this meeting is going to be key, and it's going to come at a very important time for the yen. Notably, over the past couple of months, we've seen Japanese wage growth roll over and moderate quite significantly. You can see with the big green line there, that big spike that took hold. Well, that started to roll over. Cash earnings now down to 3.13%. Headline CPI 2.54, and core CPI at 2%. So with the fact that inflation is moving towards the downside, the justification for them to start tightening monetary policy starts to fade, quite frankly. And as you get towards that 2% target, there's question marks about whether there can be a huge amount of normalization. Now, wage growth is key to this, and it does still remain at 3.13. But certainly the idea here is that they need to utilize this period of time to spark this new wave of expectations in terms of earnings. And that will really keep inflation chugging as we go forward. If wages move lower in a meaningful manner, then that kind of undermines that argument. Notably, we've seen the Tokyo CPI reading down to 1.78, a sharp decline below that 2% metric. And the Tokyo figure typically leads the nationwide figure. Not to say that we're going to go from that 2.54 that's currently in play for the Japanese country as a whole. We're not going to go from 2.54 down to where the Tokyo CPI number is, but you can see here very close correlation. So there is a view that we're likely to see significant disinflation at the next nationwide reading, and you can see exactly why here. 2.54 in the headline figure, but you can see the October number for the month of October in 2023, 0.85 for that month alone. Well, look at last month, minus 0.18. So there's a very strong chance that we see major disinflation for the next nationwide CPI figure out of Japan. And then that really starts to undermine the idea that we're going to see a protracted period of tightening from the BoJ, and potentially provides weakness for the Japanese yen. Now, if you look beyond that, you can see November, December, both negative readings, February pretty much flat. So it does feel like we're going to see big disinflation this time around, and then moving forward, likely start to tick upwards once again. But look, if we're at 2.54, there's a good chance we could drop all the way back down to 2% at the next for the next nationwide CPI reading for Japan, and really undermines what's happening there. This is the trajectory of the dollar-yen pair against the Nikkei 225. And what we can see here is that they generally have a relatively close correlation. In part, that's because a weak yen does benefit Japanese businesses. It makes their products more competitive to sell abroad. And so when we see that reversing, you start to see that upward trajectory for the Nikkei start to unwind. In terms of the chart, let's just bring up the Nikkei 225. You can see here that by and large, it had been a major outperformer for a prolonged period of time. But then we started to see some jitters, and those jitters came really as you started to see dollar yen rolling over in a meaningful manner. Dollar yen now moving towards the upside, and so we've seen the Nikkei doing a similar kind of thing, right? So that as long as we're seeing the dollar yen pair moving upwards, there's a good chance that we see a similar kind of thing happening for the index as a whole. Let's just get rid of dollar yen once again. So as we can see here, we're sort of looking at a sort of retracement phase followed by another retracement. Let's just see. This is probably more 38.2 down to 50. Okay, yeah, so it's 50 retracement. Not sure why it's not showing that. And then irrespective of that, where we are at the moment, to me, looks like it's another retracement. And so we'll be looking at this and saying, okay, that could be another potential 50% retracement before we head towards the upside once again. Not sure why it's not giving me the... I'll tell you why. I think it's because I have it too big. Too small, sorry. There we go. Right, so here's the 0.5. So far we've hit the 50% retracement and moving sharply higher to kick off the new week. So the question mark here is, are we going to see things start to roll over? Well, look, dollar yen at the moment spiking up. We've come into the 61.8 Fibonacci retracement level. We're coming into a meeting that by and large, we're unlikely to see a move from the BoJ, and the whole underlying sort of resurgence in terms of wages and inflation is starting to ease back. It's likely from that nationwide figure to ease back in a very meaningful manner. So starts to undermine things a little bit. Of course, you've got Ishiba potentially on his way out. Who knows how that's going to play out? So that again undermines the idea that you've got a PM that really is supportive of normalization. So that points towards a possibility of further upside in terms of dollar yen for the near term. Whether we're going to get back up into the lofty heights of the 160s, that remains to be seen. But certainly we're rebounding. We've broken through the 149 level. We're at the 61.8. Between the 61.8, which is 153.4, and the 76.4, which is 156, 157. These areas are going to be really interesting because, of course, you have got this really major sell-off. We fell back down into your major swing low, which is down here at 140.2. So that points towards the possibility that this rebound is going to falter. Whether that happens or not remains to be seen. But certainly, I think given the way that the data is shaping up, I think there's a good chance that we do see further upside playing out here. This is the 4-hour chart, and you can see very clear-cut trend in play at the moment. I'm just going to shift this up to the latest swing low, 151.44. As long as we remain above that level, the intraday uptrend remains in play. You can see exactly what's happening at the moment. We saw a gap higher, so yen weakness. We saw a pullback, closed the gap, and you can see now starting to move towards the upside. So I remain bullish for this market for the time being. A break below that swing low of 151.441 would point towards a possibility of it rolling over. But like I was saying with the Nikkei 225, you have got a bullish trend playing out here. You've got a similar kind of thing with dollar yen. So the dollar yen trajectory makes me feel more confident also that we're likely to see further upside playing out here for the likes of the Nikkei 225 as we move into a meeting that by and large, we're not expecting to see a rate cut or a rate hike. But certainly markets are going to utilize it to gauge whether this meeting that we're going to be seeing in December is likely to provide us with a rate hike. And you can see, let's go back to this chart. You can see that the expectation for the rate hike in December is pretty much a coin toss at 46% to 53%. So markets do not feel confident one way or another. And this meeting will give us a good idea of where we think things are going to go from here. And if you're to say which direction we think it's going to be, if it's going to be more on the side of a rate hike or more on the side of a pause, I would personally err towards a pause because of the trajectory of wages, because of the trajectory for inflation, and because of what's happening from a political standpoint. They really need to resolve things on that front as well. So plenty of indecision over in Japan, and it is really playing into a period of weakness when it comes to the Japanese yen, upside for dollar yen, and upside for the Nikkei 225 as businesses are happy at the idea that they see a weaker yen, and that generally has favored them. It's also favored tourism flows into the country as it becomes more advantageous for people to visit the country, which again is good for Japanese businesses. So as we stand, I'm expecting to see further upside for those markets, but remains to be seen exactly how it plays out, because of course we don't necessarily know exactly how this meeting's going to shape up, and we don't know exactly how the political side of things is going to shape up as well over in Japan. So, plenty of question marks in that region, and for that reason it's definitely going to be a really key area to be watching as we move throughout the week. That also includes data such as Tuesday's unemployment rate from Japan, consumer confidence on Wednesday, and on Thursday industrial production, retail sales, and then that Bank of Japan interest rate decision closing out the week with the final reading of the manufacturing PMI. So plenty to play for when it comes to Japanese markets. And for me, when you look at the dollar yen pair, you're also going to have to start looking at the Nikkei 225, because we do see these markets moving in tandem.